Want to see someone systematically disprove everything you have read about trading stocks and expose how and why you will consistently lose money if you aren't doing it right? Click the link in the description to check it out for yourself. But now for today's video.
The question, how can I find stocks for day trading before the trading session starts? Answer by Mark Montoya. Your question seemed to imply you are looking for stocks immediately before the market opens, as if they're tells or clues to what you should trade at the open. I have a word of advice. Do not day trade. Based on your question, you clearly do not have any experience with trading or the markets, and you will become part of the 95% to 99%. That is the percent of traders who fail. Before you commit money to any investment or venture, be sure you completely understand what you are getting yourself into. Know the rules. All of them. Day trading looks really easy. Heck, all you need to do is open a trading account, drop in $25,000, that's the minimum required, but you need way more, and you are now a day trader. How easy is that? It's very easy, but that's where easy stops. But wait a minute, I heard about this guy who made $30,000 with one trade, and all he did was follow this trading system. Well, for every person that does that, there are 10,000 that lost money. You never hear about those people, and nobody talks about their losses. You don't see anyone advertising their great trading system, and that they lost 50% of all their trades. Funny thing is, you lose more than you win in trading. So there is your first clue about trading. You lose more, or as much, as you win. If you lose more than you win, then how do traders make money? A good trader, with many years of experience, is able to recognize when to exit a losing trade. Easier said than done. They may have 2, 3 or 4 losers in a row, but because they know what they are doing, and understand how to trade, they will make enough money on their winners to make up for the losses. If you want to day trade, you need to understand that you are going to lose. It's part of being a successful day trader. It's the part nobody talks about, because they associate it with failure. How you manage those losses will determine if you will make it. Over 95% don't make it because they could never grasp that trading is about managing loser, not winners. If you figure that out, you will realize that it doesn't matter what you are trading, as long as you know how to manage your trades. Last week, I had a trade on and it was taking heat. I was down $2,500, and didn't want to give up on it, as it was early in the trading day, but I really didn't want it to become a $5,000 lose over the next hour or so. I decided to give it 15 more mins and then I would close it out. Things started to go in my favor, and my loss dropped to $1,000. I immediately exited the trade for a $1,000 loss, and was quite happy with how that worked out. The way I looked at it was, I just made $1,500 and avoided a possible larger loss. That position would have been profitable had I stayed in it, but how was I to know that? I could not take the chance. It just as easily could have gone south. I can tell you that most rookie traders would have hung in there, and probably made a nice profit or broke even on that trade. However, when it happens again, that behavior will come back to haunt them, and they won't be so fortunate the next time. They will hang on, waiting for the stocks or option to come back, and it will drop even more. What was a $2,500 loss, is now $6,000. Now they have a real dilemma on their hands. Do they close out the trade, which is a big hit to their capital, or do they wait for it to come back? The smart decision is the hard decision, which is close it out. They decide instead to wait it out. The stock begins to come back and they are now only down $4,500, things are looking up, but then it fades and the loss grows to $8,000. You do that a few times, and you are out of business very quickly. In addition, that scenario messes with your mind. You don't understand until you go through it a couple of times. You can see why trading is about managing losses. So what about the gains? Don't you have to manage those? Yes, but that is a mechanical process. Everybody has a system for managing winners, so I am not saying mine is the right way, but it's what works for me. If I buy XYZ for $50, and it moves to $51, I will trail my stop to break even. If it moves to $52, I will trail my stop up to $51, and lock in the $1. If it goes to $53, then it moves up to $52. I do this until I am stopped out. No thinking involved. Just a mechanical process. Where I place stops depends on various factors, and is different for each circumstance, but the idea is I do not want to take profits at some arbitrary profit target. I want to let them run as far as possible. Just this week I violated this very rule. I had a very large profit in Snap. Bought north of 5,000 shares at $14. They had positive earnings, and it gapped up overnight big, around $17. I was sitting on a very nice profit, and was pretty excited, especially considering the market was taking a big downturn and screens were red. The stock moved to $18 and I trailed up my stop to $17.50. When it hit $18.25 I put my stop at $18. When the stock hit $19 I sold. The profit was too big to pass up, especially since I was only looking to make a few grand and the broad market was tanking. Had I waited and continued to follow the mechanical plan of adjusting stops, I would have made another $1.75 per share, so I left behind about 1/4 of what I could have made, because I failed to follow my rules. Again, and I will say it one more time. We manage our losses, and let our winners run. Answer by Ravi Rockade. It's almost impossible. Understand one thing, 90% retailers makes loss in stock market and institutions makes money same no. Of times, retailers losses cause they use lagging indicators and oscillators, first price move then indicators and oscillators follows. Now we need something which is ahead of price. If you find outstanding new stock to buy it will open gap up and vice versa. It is always recommended to see stock trading as a general life buying or selling. Means the logic you apply to purchase air conditioner or television or any other product. The logic you use to purchase cheap is understanding its demand and supply. As temperature rises demand for air conditioner rises, so price rises. Now understand demand rises means volume rises, that means volume affects the price. For better understanding watch this. Answer by Ravi Kiran. Read news, research 10 small cap stocks in hot sector, play with small amount with them initially and learn to average. You cannot make money every day. If your trade goes south on a particular day, have enough money to average. Personally I put small amount and see if my analysis was right. If it wins I make a small profit and exit. If it goes south I get happy as I can average and exit with larger profit. Patience is important. Deep analysis of stocks are really important. Don't try this with penny stocks or stocks you don't understand the business. Your investment might get to zero.